The retail industry is evolving from consolidation, baby boomers retiring, private equity interest. Giorgio, welcome. You've been in the industry as an operator and now advise the retail community and provide access to not just insights, but also capital for expansion and acquisition. We are sitting here. Happy New Year to you. What do
Happy New
folks
Year.
need to know as we enter 2026 in terms of major trends you're seeing from your desk?
Wow. You first, thank you for having me on, guys. Appreciate it a lot. As far as what we're seeing in the auto aftermarket, tires, auto repair, etc., I'd say activity remains at its peaks. We're seeing so many new entrants trying to get into the space. Private equity, I mean, we're seeing those announcements day in, day out, continuing to add on to their platforms. I've seen guys as small as one or two shop owners looking to get more capital and grow their footprint. Valuations remain probably at maybe not 2021 peaks, but pretty darn close uh, for good assets. I'd say the difference now is a little bit pickier on what they're looking for, making sure that it's actually a good business, sustainable business with a history of success. Whereas 21 was a little bit, if you had a business, it was probably able to sell for a decent multiple. But high level, just taking a step back, it's going to be very attractive, continue to garner lots of interest from strategics and private equity and so forth.
So it sounds like it's a great year for both sides. From what you're saying,
Absolutely.
we get calls from shop owners all the time looking for so they're at that retirement age. Let's just say it's like a 1 to 5 store owner, but I feel like a lot of them haven't really thought about maybe some other options that they have. So sometimes we'll get a call and they'll say, "Hey, we want to hire a manager to run the store. I'm looking to semi-retire." When you get that call, because you're the expert in that, like what's kind of your playlist in terms of what your advice would be as they're looking at that situation?
I say it's going to depend on their exact goal and where they are. If there's other family members, a lot of people say they want to retire, but they still want to actually be and own a percentage of the business. That's a great play for a financial investor. The other option is to go and find a CEO type or an owner, someone that would like to maybe buy a small percentage of your company and have some equity upside and take it on as their project, and you continue to stay, part of it. I think there's different ways to skin that cat. It really is going to depend on their financial goals, life goals. If it's a full retirement, your best bet is probably going to be to find a strategic that will just take on the business and give you a nice transition period, and then you can go golfing for the rest of your time.
So, what do you actually, or like, how do you? Can you talk about the evaluation? So,
Yeah.
is it as simple like multiple, or what's like the formula for it?
There's different buyers. Some strategics are doing it as a percentage of revenue because they have their formula. They'll back into some type of EBITDA multiple. At the end
Hmm.
of the day, that's really what it shakes out to. But for simplicity purposes, those buyers are going to sellers and saying, just take a percentage of your revenue based on your number of tire units and so forth. They've modeled it out. They're comfortable paying that percentage. But most other buyers are going to look at an EBITDA multiple. The difference that you'll see when you're talking to a private equity backed or strategic that already has a platform, you can argue for full, what we call four wall EBITDA, excluding any administrative
Mm.
expenses. If you were a platform, call it a larger group, you're going to have, they're not going to have any back office support or administrative support. So there's going to be a need to include that into your total EBITDA number.
Oh, that's
Yeah.
interesting.
Right. Yeah.
So like real simple math. So if I own a store, does we do $1 million a year in revenue? It's just me, and I have a couple employees. What does that actually look like?
That one, they're probably going to give you a simple low single digits multiple on EBITDA, and they'll
Okay.
place in a placeholder for your pay that you as the owner. That's in the shop, right? They need to replace you, so you can't add that all back. But if you are, five locations and it's going to a strategic, and you have a CEO, an owner, let's call them an accountant, bookkeeper, et cetera, well, all those can be carved out because the new buyer is not going to need any of those expenses. And that's where we would come in and model it out and say, here is what the four wall looks like. But if it's going to be somebody that doesn't have any investment in the space, they're going to need that back office, and probably more as they grow, as they get larger. So you're going to be burdened on that. Doesn't necessarily mean you might be able to get a higher multiple because you're a platform. So it will
Mhm.
shake balance out a little bit. But if you're a little bit on the smaller side and you're looking to exit, the four wall is probably the best way to maximize your value and sell it
And
to a
is that
strategic.
something that you actually help with in terms of like
Oh yeah,
supporting business owners? Like how do I know what my $1 million store is worth or
absolutely.
okay.
We do it day in, day out. There's kind of no cost to that. We're just well versed in this space and always happy to help, small business owners, larger ones. And I can tell you, I've done a handful of those where just talk shop. Let's look at some numbers. Let's talk about labor rates. Let's talk about where we could actually improve your margins. And one day when you're ready, we'll talk about that in the future. But we can give you some guidance based on where you are. It's pretty standard protocol for us.
What are buyers looking at, obviously, other than the dollars on the P&L? What are the other
Yeah.
pieces that are really important to the deal?
Management team. That's going to be a really important piece to that. Who can jump in? Who's going to take the shop? Who's going to manage those? Do you understand what you're looking at? And how clean are your books? I think that's going to be a critical piece to that. Not necessarily the dollars and cents, but can they decipher it? Can you back and track everything that you're suggesting as an add back? Can you reconcile the bank statements? And all those are being done. We see a lot of, let's not call it messy, but
Mm.
convoluted P&Ls. Nothing that buyers haven't really seen before, nor with us. But it just takes time to be able to say, okay, this expense is really a personal expense. Let's understand what's doing what. Um, so that's definitely an important piece to it. Consistency, big spikes up and down can create some caution as far as investors go. So they'll be a little bit either not interested or would provide a lower valuation. Um,
Stopping there. What
yeah,
drives the inconsistency or those spikes?
that's the question, right?
Okay.
Is why did revenue drop this year, or your revenue stayed and your profitability tanked? Well, there's usually an answer, right? Hey, our manager replaced, he got sick, we had to find someone new, and by the time we did, we ramped it up. But it's just understanding, is that a one-off, or is it happening every 18 months? Then you have a churn problem. And so
Mhm.
they're looking at these performance metrics from different angles and trying to decipher what is this a good asset, and is the management team strong enough for us to invest in.
What's the most common mistake that you think owners make that really like
This
knocks the
one,
value off?
it's not even during the process. I would argue that the biggest mistake is not preparing for something that may happen 3 to 5 years from now. That includes corporate structure, tax structure, management teams, succession planning, and in a sense, not being the key man of the business, where you want to acquire a business where the CEO or the owner, let's call them, can take a week off or 2 weeks off on vacation and the wheels don't fall off. That's what they're looking for, is does the rest of the business operate without your hand in it every second of every day? And so those are the pieces I would prepare for as you're going through the thought process. You may be years away, but
Yeah, so
that
that's like
you should think about it.
a skill set or an actual business thing, right? So it's like if I want to build my business to be sold in 3 to 5 years, what would you coach me then to what's like how do I get then to that level?
It's going to depend on each business and their needs and where their infrastructure is. But most of the time, it's going to be about how are you empowering your staff, your management team? What programs are there? What power have you given them to make decisions? Or are you the sole decision judge, jury, and executioner? And I think that's where we would jump in and tell. And we've done this in the past. Is you're not quite ready until your COO that you're talking about is ready to train further. You can provide them coaching, pay for these types of kind of retreats where you treat they learn to become a CEO, and you just want to be able to show that there is the next generation can jump in and take your seat. And I think that from my perspective, that comes down not just your management team, but also your store managers, your sales staff, tire technicians, whomever it be, there should always be a path to move up. And having that kind of set in your business allows for just internal growth and sets an exciting, I guess, opportunity for the buyers to see that there's a pool of additional resources that we can pull from internally rather than having to go outside.
You brought up techs. What are the stores that are, I guess, winning from your angle doing that maybe the ones that are floundering not
It's,
doing?
it's training, Mike. I think to me, when we were running shops, we partnered with our parts suppliers, we partnered with ASE, and just found ways to continue to incentivize our techs to be better for a variety of reasons. Number one, they get better comp. Number two, you have less comebacks. Work is done properly. You can offer a wider array of services when you have technicians that can do, that are certified. But we levered the part suppliers and the manufacturers to help come in, train our techs. Even if we had to ship them out for a day or two to take a class, it's a little bit of a hit on the business for those days, but it is just so worth it for the reason that the tech feels that they're part of something,
Yeah.
and then the business just improves.
The one concept that always comes to mind when I hear of that is Les Schwab and like his story in terms of what he did and giving money to the techs and the ability to retire and the amazing stories that he had, right, during his legacy.
Great. And by the way, still an incredible group.
Yeah.
I think that they still are true to their roots. We did a transaction with them last year, and I tell this to them all the time, but they were the best to work with, just honest, good people. And that shows in their employees, right?
Yeah.
And 100% agree with that story. Yeah.
Yeah. As an industry, we really struggle with the retention piece on the tech side. And,
Sure.
obviously they're doing the right thing, and I'm sure they have a higher retention rate than the average company. But yeah, just interesting to see how he basically built his company.
Right.
Where what are the trends that you're seeing for the future as we move forward in terms of just we're going to keep going and the consolidate? Do you think, like, I guess more directly, the independent shop owner? Do
Mhm.
we think that weight is going to decrease dramatically over the years, or where do you see it going?
Yeah, I do think that the consolidation is going to continue. Just the pure energy behind it. New entrants day in, day out are looking for this type of opportunity. And for me, it's cars aren't going anywhere. And repairs might change just because of technology, whether it's EV, it's hybrid, it's tech, but the repair still needs to be done. And I just don't see in a world where we're going to disappear. We're kind of AI in a space where AI and tech can only make us stronger and better rather than kind of take over our business. Um, Consolidation, like I mentioned, is going to continue, but I still feel really strongly about the industry as a whole. Specifically, repair, less tire. It's even more fragmented from my perspective of than the tire was. So you're going to continue to see that. What we're also noticing is quite a few groups are deciding that they want to grow themselves, and which is exciting, right? We're still entrepreneurs as a group, and instead of just saying, "Well, I guess I just have to sell to private equity," the next question is, "What can I do to grow?" And smaller groups are becoming bigger, and they're finding capital, they're finding partners, and starting to grow their network to become a mini platform. Eventually, they'll sell it in 5, 10 years. It could be 20, who knows? But it's exciting to see that the local guy is now trying to not accept defeat against Goliath, but go up against them and compete with a family friendly field, but with enough scale that they can compete. And that to me is just, it's great for the industry to see both versions of it instead of seeing the big guys come and swallow everybody. And all it is big box retailers everywhere you turn.
Yeah, I often wonder, is like Amazon going to be the company when we're at the baby boomer retirement age, or
Yeah,
if we'll still
right.
have such a quantity. What's your definition of a platform? I hear that terminology quite a bit, but maybe an independent store owner doesn't know what that really means.
Yep. Platform means a company that's large enough to be the first investment for a financial buyer. Generally speaking, the floor has been 2 million in profitability, closer to 3 as in the recent years is what we've seen. So that could mean, call it somewhere between 20 and 30 million in revenue, however
Okay.
many rooftops that may be, but that would be a great platform. Could be 10 shops, it could be 20, it could be 30, just depends on your size. But
Yeah,
that's
thanks for
where
defining.
those guys start to come in and say, this will be our first investment.
Okay. And these are new PE firms that are newer to the market that want to gain access. You're saying they're starting kind of at that level and growing
Yep.
from there.
Into the auto aftermarket. Yeah. Aftermarket
And why
services.
and why do you think that there's a bigger opportunity in the you said not in tires, but in
Auto
the
repair.
auto repair? Why is that?
Yeah.
Why it's more fragmented in terms of just
It's,
more independent owners,
yeah. I mean,
higher
if
volume?
you, yeah, higher volume, you just look around as you drive down the street, there's a handful of tire shops, but how many independent repair shops? Even if they're small, 2 bays, 3 bays, they're a dime a dozen. And so I expect some type of consolidation to continue there, whether it's within a niche of, European auto repair, import auto repair, or just a general auto repair. I think you're going to continue to see that. That's a thesis of mine, at least, that
Oh
that
wow.
I remain excited about.
Yeah, so I wouldn't think that there would be a lot of consolidation with those true specialty shops, but you are seeing that as well.
I think it's coming. I
Okay.
haven't seen it yet, but to me is at least I'm in Southern California, so we see so many specialty shops, and my brain starts ticking and going, "Ooh, someone's going to roll these up,"
Ah, I've never thought about that. It's really interesting.
Yeah.
Um, so for owners and leaders, that are listening, and they're thinking about growth and legacy, what's one final practical piece of advice you'd hand them going into 2026?
Oh, that's a great question. Get your books in order. That's the
Yeah.
key. That is the biggest challenge when it comes to deals is as we go through the process of due diligence and finding all these different items that were unaccounted for. We don't know what this is, and you want a buyer to have confidence in the business that you're representing. And I want to be clarify, it's not necessarily buyers, but also if you're looking to raise capital, you're going to have debt providers to also look in the same manner, or just pure investors. Everyone wants to feel confident in what they're acquiring. They're putting a lot of dollars into it, whether it's to acquire the business, invest in it, or even just to do the due diligence. So getting ahead of that and making sure your books are in order would be the most important piece for me.
I appreciate that. And in terms of the best way to contact you if someone's interested in learning more how you could help them?
Yeah, you can always find me on LinkedIn, but also my email is giorgio.andonian@focusbankers.com. Otherwise, you can also find me on focusbankers.com under the automotive team.
Awesome. Well, thanks so much for joining today, Giorgio, and looking forward to seeing you at one of the trade shows in 2026.
We'll be there. Appreciate it. Thanks, Mike.
Thank you. Bye bye.